Hi guys, Connor from Zenfinex here, back with an analysis for gold, which should take us through the rest of May. In today's video, I'm going to be giving a rundown of what is really going on in the economy at the moment and tying this in with gold prices. Now, I mentioned previously that there were signs that this could be a good month for gold, and this has proved to be true as gold has shot past 1800 to trade at around 1834. I'm going to be seeing if there are still legs in this move or whether we might start to see a chart that's pulling back slightly. Okay, so from a fundamental standpoint, I've noted down the themes that which are going to try and tie into this narrative which is really going on in the economy at the moment. Now, last week we had non-farm payrolls and the job numbers were the biggest miss in many years. For a lot of people, the biggest miss they've ever seen. In fact, it was predicted that around 1 million jobs were to be added to the US economy, and the data showed just around 200,000 odd. Now, this huge miss would have put a real smile on the Fed's face, really, and it was a real I told you so moment, meaning that the US is not out of the woods in terms of the pandemic just yet. Far from it, in fact. This has been the Fed's stance the whole way through, and this really allowed gold to drive to the upside as we saw a much weaker dollar and the 10-year yield slumped as well. However, the US 10-year yields actually ended higher last Friday when you compare the rate before the news to after the news. Now, it snapped back above 1.5 after a very brief stint below, and this is really important. Now, this says to me as a whole, 10-year yields, they want to move higher and the curve is definitely steepening. And what does this mean for gold? Well, higher Treasury yields means lower demand for gold, and this is a theme that we could see for the rest of this month. Furthermore, we have the market jitters, the word that's been going around, over inflation, which is all linked in with this narrative as well. Traders are awaiting consumer price data later today, about 1:30 p.m. GMT. And if we were to see a large number coming out of this, then the Fed will be under continued pressure to tighten policy earlier than expected. By the time you guys see this video, the CPA data will probably have been out by now. So just have a look to see if we do get that large number. Now, the Fed are quite stubborn in their approach as they've been. So their stance is unlikely to change when you hear speeches throughout the month. But you cannot ignore the data. And as the pressure continues in the form of higher pricing, I'm wondering whether the language coming from the Fed might start to change towards the end of the month. If this is the case, we could see the dollar higher and as a result, gold lower than where it is right now. Okay, so where are we at for gold right now? As you can see, when I said that it could be a good month for gold, it was when we was forming this double bottom here and we had this nice run to the upside. And as you can see, the RSI has ticked upwards as well, but it's looking like it might start to tick to the downside. Now, if I get rid of that, what I've noticed here is that we had this break of the 50-day moving average and the 100-day moving average on the daily chart, but actually we're now running into this 200-day moving average, which is situated at around 1850, which is a key level as well. So for me, if gold prices are going to go even higher, I'd like to see a break of this 200-day moving average, potentially a retest, and then we can go and aim up into what I would have as my take profit level, which would be around this daily order block here. Let me mark that as our daily take profit if we was buying around 1930. Don't see prices going much higher than that because we do have this descending channel which will come into play as well, as you can see from the chart here. More likely, I think, if I get rid of these drawings, is that we are potentially going to run into this 200-day moving average, which is starting to turn to the downside. And with the narrative I have around the economy at the moment and the Fed stance and inflation and 10-year yields, a lot of things going on, I can see gold pulling back ever so slightly. Now, if I go onto the 4-hour chart, again, I'd like to give both stories, but as you can see, price action is stuttering along here. But I would like to see a reaction out of a bullish order block, which is here, at around 1796, 1795. We do have this price inefficiency as well, which is around all this here. Now this is what I think would be a magnet to price, which would actually be a really nice selling opportunity from now with a nice risk reward ratio. And I'll show you what I mean, because if you look where price is at the moment, we're at this area here, which is actually potentially a head and shoulders pattern that we've seen. And if you have a look at, if I zoom right in on this, this is back from February. Where did we have this move come from eventually? Well, it came from this order block that was left here, which actually left some inefficient pricing in behind. If I move that all the way across, you can see we've actually respected this level quite nicely at the moment, and we came up and run up and filled this price inefficiency. And now what I would like to see is potentially we've had the rejections from this level already, so there would be no reason why I couldn't short the market with my stop loss just above, literally just above this order block, with my take profit filling this price inefficiency, which is around a 3-hour trade. Because when price does run into, when price does run into this level here, this price inefficiency, this market imbalance, there won't be much stopping price running right through and at least testing this order block here. Now, if again you're a buyer of gold, then this could be your level to buy as well, which would actually be my sell-in take profit. Move those drawings and just have a quick look on the 1 hour chart, but it is painting a similar story. We've had this break below the 50-day moving average, and we've come back and retested, so again potentially a nice selling opportunity here. We also had these breaks of structure to the downside, which I'll mark for you. Break of structure, retest of just missed this order block, but now we're looking like we're retesting this level again, and we could see price run down and fill in this same inefficiency that we can also see on the 1 hour chart as well. So tying in all the narratives around the economy, I'm really interested to hear what the inflation data comes out today. If it is a big number, then I will be looking to sell gold on the back of rising Treasury yields as the curve does look to be steepening. If gold was to run up and break above this 200-day moving average, then again that would confirm my bullish bias for me. But other than that, guys, thank you all for listening. Please like and subscribe to the channel. Drop any comments in on the comments section, or you can message me on my Instagram above me. Interested to hear your thoughts on gold. We're approaching some really key levels and some really key times in the economy at the moment. Take care, guys, and I'll catch you all for the next video, which will be tomorrow.